All right, everybody, welcome back. We are diving into the world of dividends today.
Yeah.
So if you're thinking about maybe adding some dividend-paying stocks to your portfolio,
Right.
we've got a whole stack of research here
Right.
on two companies,
Right.
specifically Ares Capital Corporation, ARCC, and then Prospect Capital Corporation, so PSEC.
Okay.
These companies actually share their profits with you,
That's right.
which can be pretty sweet, especially when the market is feeling a little shaky.
Absolutely. And that's what makes this deep dive so interesting. We're going to really explore if these companies, ARCC and PSEC, could be hidden gems for both income and growth in your portfolio.
Right, exactly.
Keep in mind, all the numbers we're looking at are from January 25th, 2025.
Perfect.
So just a couple days ago.
Okay, so both of these companies are what are called business development companies.
Yeah.
Or BDCs.
A BDC.
Can you break down what a BDC actually is?
Yeah, so think of it this way. A BDC is a company that invests in other companies,
Right.
often smaller ones that might not qualify for traditional bank loans. They provide financing and support.
Okay.
They take on more risk, but they're aiming for higher returns.
Got it.
And that is fundamental to understanding both ARCC and PSEC's strategies.
Okay, so that makes sense.
Yeah.
So let's start with ARCC.
Okay.
They're a pretty big deal in the BDC world, right?
They are, yeah.
Their stock price is currently sitting at $23.43.
ARCC is a major player, and they are boasting a robust dividend yield.
Ooh, robust.
As our research puts it.
Okay, robust sounds promising.
Yeah.
But what makes them so reliable when it comes to actually paying out those dividends?
Well, one key factor is their diversified portfolio.
Okay.
So they invest across a wide range of industries.
Okay.
Spread their risk so that, if one sector is struggling, the other.
Right, so they're not put all their eggs in one basket.
Exactly.
Smart move.
And they heavily favor senior secured loans, which means that they are first in line to get paid back if a borrower goes bankrupt.
Wow.
So historically, this has really helped them maintain those dividends, even during recessions.
Okay.
Of course, you'd want to look at the current portfolio to see how that strategy is playing out right now.
Of course, research.
Always.
So speaking of diversification, PSEC takes it to a whole other level, right?
They do.
Their stock is currently at 4.38.
Yeah, it's lower.
And they've also got a pretty attractive dividend yield, according to our research.
That's right.
But how does their approach to diversification differ from ARCC's?
Well, PSEC's portfolio is even more diverse.
Okay.
It spans sectors like energy, industrials, financial services, and more.
Wow.
So this broad exposure can be really advantageous as economic conditions shift, allowing them to potentially capitalize on growth in different areas.
So they're like ready for anything the market throws at them.
Yeah, that's a good way to put it.
But you mentioned something earlier that caught my attention.
Yeah.
PSEC invests in both debt and equity.
Yes.
That sounds kind of complicated.
Okay, so imagine PSEC not only lending money to a company, but also owning a piece of it, like buying a slice of the pie.
Okay.
If that company performs well, PSEC benefits in two ways.
Okay.
From the interest on the loan and from the increased value of their ownership stake.
Oh, that's a great analogy.
Yeah.
So they're aiming to profit from a company's success in multiple ways.
Exactly. It adds another layer to their investment strategy.
Interesting. Okay.
Yeah.
So here's the big question for our listener.
Okay.
Risk versus reward. High yields are tempting.
Yeah.
But how do we know if these companies are actually solid investments?
Well, that's where due diligence comes in.
Okay.
You can't just chase those high yields without looking at the bigger picture factors like interest rate environments and credit risk are crucial to consider.
Got it.
So, for example, as interest rates rise, borrowing becomes more expensive, which could potentially impact both BDCs and the companies they invest in.
So it's not just about the individual companies, but the overall economic climate as well.
Right, exactly.
Okay. What steps can our listener take to research interest rate environments and credit risk?
Well, when it comes to interest rates,
Yeah.
it's helpful to look at historical trends and forecasts.
Okay.
So how have rising rates impacted BDCs in the past?
Right.
What are experts predicting for the future?
Okay.
This can give you valuable insights into the potential impact on ARCC and PSEC.
Got it.
As for credit risk, that involves looking at the financial health
Okay.
of the companies these BDCs are investing in.
Mm-hmm.
Are those companies likely to repay their loans?
Right.
What are their credit ratings like?
So there's definitely some homework to do before jumping in.
Informed decisions are the best decisions.
All right, so we've covered a lot of ground here.
We have.
What's the main takeaway? Our listener should keep in mind as they consider adding ARCC or PSCC to their portfolio.
Both companies offer those enticing high dividends.
Yeah.
But like any investment, there are risks involved.
Right.
And it's crucial to understand those risks before making any decisions.
That's a really important point.
Yeah.
It's easy to get caught up in the excitement
Right.
of potentially high returns.
Absolutely.
But understanding the risks is essential.
Yes. And remember, what might be a suitable investment for one person might not be right for another.
Totally.
Everyone has different financial goals,
Right.
risk tolerance, and investment timelines.
Couldn't agree more.
Yeah.
So as a final thought
Okay.
for our listener,
Yeah.
what would you recommend they do next?
Dig deeper.
Okay.
Explore those financial statements.
Yeah.
Get a clear understanding of the risk factors involved,
Mm-hmm.
and then decide if ARCC, PSCC, or both
Right.
align with your personal investment goals
Right.
and risk tolerance.
Perfect. Learning about investing can seem daunting, but this deep dive has given you a great foundation to build on.
It has.
Now go forth
Yeah.
and make those informed investment decisions.
You got it.
Thanks for joining us.
Thanks, everyone.
We'll see you next time.
See you later.